My name is John Bogle. Many people later called me the father of index funds. But if you ask me what single sentence I most want to leave to ordinary investors in this life, I would say, if you want to succeed in investing, you must become a long-term investor. That line sounds plain, but it's only after watching again and again as people were swallowed by the market that I learned to say it with conviction. When I was young, I entered the financial industry, an industry overflowing with confidence. People loved talking about forecasts, about what comes next. Everyone believed they could see through the market, and everyone tried to prove they were smarter with more complex models and more frequent trading. I have met far too many brilliant people. They could turn charts into art and reports into poetry. Yet they often made the same mistake. They turned investing into a contest of constantly beating someone else and forgot that investing should be something far more humble, letting your wealth grow through time. In that world, the most seductive thing wasn't returns. It was the feeling of, I won. And that feeling often pulls you toward frequent trading, overconfidence, and higher costs. Over time, I became increasingly certain of this. There are many things in the market you cannot control: news, sentiment, flows of capital, cycles, even pure chance. But there is one thing you can control: costs. And costs are among the most brutal truths in investing. They are not possible. They are inevitable. Every trade, every layer of fees, every impulse that whispers, if I just adjust a little more, it'll be better, cuts a piece out of your compounding. You don't feel it when it's small, but cut away for 10 years, 20 years, and you'll realize you didn't lose to the market. You lost to the friction you kept creating. I am not against effort. What I oppose is pouring effort into something you can never sustainably win. What I wanted to do was actually very simple: to help ordinary people earn a fair share of the market's return without needing to be geniuses. So I championed low-cost index funds. The reason wasn't romantic. If anything, it was a bit cold, because most active traders, after costs, struggle to beat the market over the long run. I have seen too many people believe they earned high returns, when in truth, they simply hid risk and cost in the future. And in some future drawdown, the market delivers the bill all at once. That's why I emphasized again and again, you do not need to prove yourself every day. You need a method that can stay with you for decades. That is the meaning of long term. Many people would speak to me about investing with bright eyes. Bogle, I want to earn more. And what they meant by more was usually a bigger number on their account screen. But I would always ask them one question: what is the purpose of your investing? The purpose of investing is not to see a pretty percentage on a screen. The purpose of investing is to build real wealth. And what is real wealth? It shows up as a rising ability to purchase goods and services. It means that in the future you can buy more and better. It means you gain more choice and a more stable life. So the ultimate goal of long-term investing must be real returns, not nominal returns. Let me explain with a very simple story. One year, your investment account shows a 10% gain. You're happy. You think you won. But that same year, the cost of living rises faster. Rent, food, energy. Everything is more expensive. If inflation is 6%, then the true increase in your purchasing power is only about 4%. A rough intuition is enough here. And that leads to a painful realization. A rising nominal number does not mean you are truly richer. What you must protect is purchasing power, your future certainty in life. Once you understand that, many things become suddenly clear. You care more about long-term sustainability than short-term excitement. You care more about costs and risk than a temporary spike in returns. You care more about whether you can hold for 20 years than whether you can win next week. The longer I stayed in this industry, the more I came to revere two things: time and human nature. Human nature craves immediate rewards. That's why people can't resist chasing rallies, panicking, switching strategies, and constantly doubling down on their guesses. But the irony of investing is this: the more you try to prove yourself in the short term, the more likely you are to destroy your long term. Many people don't lose to the market. They lose to the impulse that says, "I have to do something." But I want to tell you, in investing, action is not the same as progress. Very often, the most valuable skill is staying calm in the noise. If you only remember one sentence from me today, let it be this: if you want to succeed in investing, you must become a long-term investor. But I hope you understand that long-term does not mean blind stubbornness, and it does not mean pretending risk doesn't exist. Long-term is clarity. It means you understand that what you pursue is purchasing power, real wealth, and the quality of your future life, not a number on a screen that makes your heart race and could still be eaten away by inflation. When you shift your goal from nominal returns to real returns, you stop being easily pulled around by the market, and you begin to see something clearly. The market tests you every day. Are you trying to win once through impulse or win a lifetime through principles? Long-term investing is not slow. It is putting time on your side. It is letting compounding work for you, keeping costs lower, and giving your human nature fewer chances to make mistakes. And I will leave you with my true conclusion. When you stop chasing nominal numbers, you finally begin building real wealth. When you choose to put time on your side, you finally begin to invest successfully. Thank you for listening to my story. May you spend a lifetime winning the only victory that truly matters.